Welcome, everyone. This is Denise Johnson. I'm the co-organizer of the Boston FinTech Meetup group with Sarah Biller. As Sarah has so eloquently put together yesterday, we have a very strong partnership with MassChallenge FinTech team, and we want to welcome you together to day 2 of a week of lunch demo series where we look at startups that are shaping the future of banking. Today, on day 2, we're going to be listening demos from 4 amazing startups that will be talking about underwriting and portfolio management. Few housekeeping items. We would please enjoy the demos and ask a lot of questions via the chat. Shane would be putting, Shane will be managing the chat. And at the end of the demos, we will expand on your questions and have a short Q&A session with the startups that are presenting today. With that, welcome again. And I'm passing I guess it's not the podium. I'm passing it on to Devin.
Everyone for joining us today. I'm Devin Sherman and I'm the Managing Director of MassChallenge FinTech. So super excited for our second round of demos focused on underwriting and portfolio management. And today, as Denise mentioned, hearing from 4 MCFT startups, including Boss Insights, Fincura, LendingFront, and Stratify. All of these companies have worked intensively with our MCFT banking partners, and they're also working on some incredibly relevant and robust COVID solutions. So please fire away on your questions. And first up, we'll hear from Boss Insights.
What's up, New York? So I am the co-founder and CEO of Boss Insights, a lending platform that accelerates lending from months to minutes using big data and AI.
And I'm Luke Moynihan, the CTO of Boss Insights. We've been in existence 2.5 years, and we're actually part of 4 different tech accelerators, and we've also managed to raise just around $1 million so far in funding.
Even though payments have accelerated from checks and cash all the way to mobile banking, lending is still largely paper-based. So all that's required is to simply create that API connection to thousands of different cloud-based software systems, create a common data model, and then make sure you do that scalably, not one at a time to keep up with the progress. No biggie. So that's what we did. So we moved from balance sheets and income statements that have to be calculated and sent to risks, that's the months, that's traditional lending, to digital lending. So here we are with real-time approvals and accelerating lending from months to minutes.
Today I'm illustrating an end-to-end automation platform for CARES PPP, which includes the application, due diligence, and ongoing monitoring or forgiveness calculation. The platform automates the work required to manage the over 1 million applications processed and supports banks in understanding their future exposure for the billions of dollars extended. It also provides clarity for the businesses who have applied for the program. The borrower would go onto the application form, which would be available on your bank's website. They fill it in as you're seeing the borrower do here. The lender is then able to log into their portal to see the applications which have been automatically scored and which borrowers are approved for the program. In this case, the borrower is approved, and the lender can send them an email manually or automatically, depending on how they've set up the system, to invite the borrower to submit documentation for forgiveness calculation and monitoring. The borrower gets an email to the portal that they can log into with their username and password. It looks like a portal that's set up within the lender's system. They can choose the application software. In this case, the borrower chooses an accounting application, which is QuickBooks, and connects to it by clicking a button and entering in their username and login. Within seconds, the platform connects to QuickBooks and pulls the data. The borrower can then connect their other information. We have a few payroll integrations that are depicted here, and the businesses can use those, but if they're using other providers, they can log into that provider separately, create a report of their monthly payroll, and send it via a plugin to this platform. The borrower will see their entire application, including the information on their eligibility for PPP Cares, the suggested loan amount, their ongoing expenses, and the information on whether it's in line with the limits for the loan. The lender has the same view, which enables them to access the forgiveness calculations and monitoring. The lender can also see their entire portfolio for an instantaneous view of all the loans processed. What's been demonstrated here is an end-to-end platform supporting the entire PPP Cares process, from application to forgiveness calculation, to support the ongoing exposure for lenders and ongoing forgiveness for borrowers. We are in a very unique time in market. Traditionally, when fintechs approach the market and they're selling to financial institutions, they're given guidance that they can expect a very long sales cycle, 6 to 24 months long, and that's not what's being experienced right now. For fintechs who are able to hone in on an acute use case, an acute need that they can fill, the sales cycle is sped up quite significantly. The first thing that Boss Insights did was offer free technology, and we were not the only ones to do so. There are other fintechs who offered the same technology and were listed on the Forbes free tech list. As a result, we did go to market and partner with our accelerator partners to get introductions, and we were able to secure a collaboration agreement with Oracle. In addition, we did get some more press coverage from publications like Forbes and Bank Innovation and Financial Revolutionist when we started focusing specifically on one part of PPP, and that is the forgiveness calculation part of the puzzle. Originally, our solution was an end-to-end solution, but like all of the Boss Insights solutions, it is modular. And when we realized that the people we were speaking to really were focusing on that forgiveness challenge, and we started messaging to that, we got additional coverage. It is that, in addition to our ability to onboard this platform within 1 to 3 days, that has led to our uptick in revenue opportunities to date. For more information, contact your Oracle rep or visit Boss Insights at bossinsights.com.
Good afternoon. My name is Patrick Kay. I'm the Vice President of Sales here at Fincura. And I'm here today to talk to you about how you can rethink financial spreading. Today, more than ever, banks need to squeeze out more value out of every single process. I want to talk to you today about Fincura's Financial Insight Engine and how we can radically accelerate the process of financial spreading, but also help build a strategic internal data asset that's going to be accessible across all of your teams and your systems. What we're able to do is extract all of the data from any financial statement in 1 minute or less, help you spread every line item into your template in 8 minutes or less, and help manage those interim financials across your portfolio in seconds. If there's any credit analysts in the room, I'm sure you've seen a financial doc like this before. It's grainy, it's tough to see. There's data buried under the 20 different pages that have come across. And I want to show you how our tool is going to help you find that financial data and not only find it buried in those documents, but also extract all that data into a tabular view, trying to eliminate as much of that manual effort as possible. So when we think about extracting data and eliminating the manual data entry part, we want to ultimately allow our data, or our customers, the ability to focus on the financial analysis component, not about entering in data. So whether you're taking an income statement or a balance sheet or any statement within any format, any condition or any prep type or any period, we're able to extract that and help you get to spreading quicker. Now, I understand the slide's a little busy here, but at the end of the day, the most important piece for you to understand is that beyond the extraction of the data, Fincura understands financial analysis, right? So when we think about how we're helping our end customer every single day, we're helping them get 90% of that spread done faster than they ever have before. Ultimately, we want to give them the ability to get to 100% data accuracy 80% faster than they ever had prior. And here's a good example of our tool in action. If you remember our source documents from earlier, we've got those up on the left-hand slide. We've got a template spreading typical to your Excel doc that you'd be working in. Every line item has already been categorized. You're able to reference the source document if necessary. But ultimately, what we're trying to do is guide you through this spreading process. And again, trying to drive more efficiency where we can. So ultimately, as you see here on the right, get you to check 0. I think, again, here being a little bit of a busy slide, ultimately, what we're seeing today is banks are transforming from siloed verticals to horizontal integrated end-to-end layers. They're doing that through data. So instead of looking at financial analysis as a to-do within a process, where you're seeing data being trapped in documents, databases, workflow tools, what we're trying to do and what we're trying to solve for banks is the ability to unify that business financial data and actually create a data asset that is actionable and can drive better efficiencies across bank departments. I wanted to kind of talk about the typical use case that we're seeing, which has really evolved over the last, I'd say, 30 to 60 months with the changes that we're seeing. Really, this is a unique opportunity for banks to evolve. Customers as well as employees have adopted, more digital experiences, but probably more importantly, have really felt the pain when solutions are not ready or are not accessible, or there's barriers of entry there. So some of the immediate needs that we help solve for, right, is we're generating desperately needed bandwidth. So instead of throwing bodies at it, people are able to use technology to help make their life easier. Help fuel relationships between credit teams with fresh data, right? So having the teams feel confident in the data that they're receiving, helping to identify risk and opportunity in the existing portfolio, probably the most important metric that we're trying to track. And of course, ultimately giving you efficiency back by underwriting commercial loans in minutes, not hours and not days, right? Then of course, there's long-term benefit here. When we think about, once this is over, we're trying to help build strong financial data assets, as I mentioned before, enable more frequent financial reporting without additional costs or more process. We know teams are not looking to add processes they don't need to. Drive larger and smarter scorecard decisions, using the data that you're building up in Fincura. And then lastly, reduce compliance and audit costs through traceability every step of the way in the financial analysis. So this is a good example of sort of the end screen, right? When you're working within Fincura, this is showing the summary financials, all the ratios that you'd be looking for. Here, we're actually tagging a footnote. So to wrap up, just want to kind of give it a good example of sort of how we partner with every one of our customers. So our onboarding, very simple, very easy. You sign up today, you could be live tomorrow. But we're trying to get you live in days, not months. We provide training and support that's included with every one of our customers. We provide our customers with a seat at the table. So that's where our obsession with feedback and, of course, our continuous and frequent updates come from. We think our customers are the ones who are going to help us create our product roadmap, but also help validate our roadmap. So that's an important piece for us as well. Lastly, we've got an offer for everybody in the call today. If you take a demo with us by the end of the month, so May 31st, we'll give you 3 months free for any new customers who take us up on that offer. So thanks so much. Appreciate everybody's time and looking forward to answering any questions you might have.
Hi, I'm Noah Smith with LendingFront. We are a white label small business lending platform that works with clients that include banks and CDFIs and a range of other companies that provide credit in some form to small business clients. And I'm going to talk a little bit about how some of our clients are responding to COVID, how we're working with them both to respond and to prepare for the world after the economy returns to normal, hopefully sometime in the very near future. And then I'm going to go to a short demonstration of our platform. So here are a few ideas that are general in nature, not specific to LendingFront, although these are things that we are helping our clients to do to, again, provide credit to their small business clients during COVID. The first is simply to bring everything online. Invest in your online channel. This is obvious to everyone on this call, I'm sure, but it may or may not surprise you that a lot of small business lenders still have very manual processes. And in addition to going fully online, fully digital, fully, right? The key is to think fully, right? Not just the application form, but also the underwriting origination through servicing. And the idea here is not to replace people, but to help your people focus where they're most needed, where human interaction and human judgment are required. The second tip is to use the most relevant, timely information that's available, not tax returns from last year, but current cash flow. This is going to be especially critical as things are going to be changing very quickly when we come out of COVID for the very near future, at least. And related to that near future concept, we're working with clients to offer a much broader range, in particular at the short end of the spectrum, on the loans that they're originating. Many businesses don't know where they're going to be in 6 or 12 months, let alone 5 or 10 years. And so if you do shorter term loans, that enables you and the borrower to be much more nimble and adjust as things change, which they're sure to do. And also to think about shorter or more rapid payment frequency, not just monthly, but you can, if you offer weekly or daily, that enables you to respond much more quickly, take much smaller payments that many businesses find easier to plan for. And also to look at other signals, including consumer sentiment, especially for retail businesses. That's an important thing to look at. Now I'm going to go over to a short demo.
This is the dashboard where a loan officer with full rights is able to access our full suite of underwriting and origination tools. We'll come back to this, but we're going to start by submitting an application through the customer portal. This is our customer-facing user interface integrated here with a mock-up of a bank website that allows a business owner to apply for a loan directly online on that bank's website. This asks the user first to create login credentials before providing business information and information about the loan that they're seeking. The login credentials allow the business owner to log back in at any time to complete their application if they're not able to do it in the first pass. And that might include documents that they might be asked to upload. Here, they're being asked to provide their bank login credentials so that we can actually pull bank transaction records directly, which is more efficient than asking them to upload bank statements, for example. Here we see the business owner uploading documentation that might be attached to the application, for example, articles of incorporation and tax returns and that kind of thing. Once they've submitted that, they can see in the navigation panel here what they've done and what steps are going to be next. Now we're going to go back over to the lender side. And here an underwriter can see the application that has just been received, and they can click in and begin to underwrite that loan or underwrite the application. There are a number of tools here. Here we have some summary application information and also here some summary credit score information. If they want to interrogate that in a little more detail, we have a number of tabs across the top where they can do that. Here is a credit bureau tab where we have a few different reports on the business and on the owner. This is a blended report from Experian, for example. Now we're going to look at the cash flow tab. This is how we present the bank transaction records that we pulled in when this business owner provided the login credentials for his operating account. Now we're going to move over to the social tab. This is useful for doing some light diligence on retail businesses where we have some street view images and reviews. There are a number of other tabs here. I'll put a couple of other tabs from the demo sandbox up on the dashboard just to give a sense of what's available. But for the purposes of this quick demonstration, we're going to go back to the offer tab. This is essentially the control panel for an underwriter, and select a few offers to send to this business owner. Whether the underwriter is able to send one or multiple offers, that is of course configurable. Now we have sent those offers to the business owner. The business owner gets an email with a link that will take them back to the customer portal where they can view those offers that we just sent them. Let's say they choose offer number 3 here, and that will of course trigger an alert to somebody on the lender side so that they can now move forward with closing that loan. Here they're going to approve it, and this is what that step does for this demo configuration, is generate the closing documents, the loan agreement, any guarantee that's going to be part of the closing documentation, and that can be viewed here on the lender portal, and that can also support the sending of an e-sign link. We can integrate, LendingFront can integrate with a number of different electronic signature tools for the demo sandbox. We're doing that with HelloSign, Laser Pro, and DocuSign are also popular options here. Now that the loan agreements have been executed, all that really remains is for that loan to be boarded and for the borrower to get funded and for that loan to go into servicing. Here on the lender side, we can see that last step being taken, and for most banks and credit unions at this point, the loan would probably be handed off to their core servicing platform. In the interest of time, I'll end the demo there, but I'll show one product slide that just illustrates that we also support servicing, which the demo didn't cover. And with that, I'll wrap up. This is just one quotation. I realize this is a bit long to read on a slide, but I can share these slides with you if you reach out to me at the contact information here. This is just from one of our clients, the head of a Baltimore area CDFI, who just expressed her gratitude at being able to seamlessly work remotely once COVID hit and still manage their small business lending operations. And I will end it here. And if you want to learn more about us, check out our website. There are a couple of much more polished demo videos there. And reach out to me if you'd like to learn more about LendingFront. Thank you.
Hello, I'm Laura Kornhauser, co-founder and CEO of Stratify. We appreciate this opportunity to tell you more about how we're helping banks make transparent, informed, and inclusive risk decisions during this time of unprecedented uncertainty. Thank you in advance for your time. We believe that machine learning powered solutions are best positioned as a complement to the human rather than a substitute, particularly for making predictions during times of uncertainty. We have built a decision management platform that bridges the gap between expert systems and advanced machine learning to deliver precise and reliable predictions, even when the past does not predict the future. During this time of unprecedented uncertainty, how do you continue to manage and assess risk with control and confidence? Existing models are outdated and new training data will not be available for a long time. The level of transparency provided by Stratify solutions is radically different than what others offer, most notably in the ability to allow you to identify what risks to focus on and mitigate unwanted bias in both data and models, something that is difficult to impossible to do with other AI/ML solutions. Understand how the model makes predictions and decisions, both at the model and the individual decision level, and what the underlying driver of changes in both your risk and return actually are. And finally, take action by integrating your domain expertise together with real-time data to develop new strategies for both your existing and future customer base. This is how we will achieve an inclusive financial recovery. In response to the COVID-19 crisis, lenders have increased risk thresholds to protect their capital base. If this behavior pattern persists, it will have a disastrous, long-lasting impact on both local and global economies. At a time when answers are hard to find, Stratify is excited to announce a new partnership with Innovesta to spearhead an inclusive financial recovery. While this partnership has wide-ranging applications across financial services, today we will focus our discussion and demo on the value our partnership delivers to small business lenders during this time of crisis. In particular, we will walk you through how you can identify how risk is changing and see expected impact on your portfolio performance, and identify segments of borrowers in your portfolio that will require extra attention. How you can understand and review why these loans are actually problematic, and how you can take action, evaluating different mitigation strategies and updating your model with new and relevant information and insights. First, the lender looks across its portfolio of small business loans to identify new and relevant information on its borrowers from the outside world. The lender identifies a group of loans where the risk has changed materially in the last day. The lender wants to incorporate this new information into its current risk assessment on its loans to these small businesses. This information from the outside world is seamlessly integrated into the lender's models using Stratify's platform and fully customizable correction and response models. This correction and response model goes above and beyond the variables and rules of the original credit model and looks at additional factors such as ongoing financial performance and Innovesta's COVID-19 Response Index, or CRI. Additional expert rules are created to describe both new risk and possible ways to mitigate that risk. The crisis correction layer incorporates insights from previous crises, real-time sentiment and resiliency information from our partners at Innovesta, and is easily configurable based on your experts' views. Next, the lender looks at the original loan decisioning model side by side with its new model that includes the crisis correction layer. Loans where the new model's score is below the threshold are the most problematic and require special attention. The lender wants to drill down into these problematic loans and the companies behind them. With a single click, the lender can access detailed information and understand the reason behind this flag, be it related to internal information sources such as missed payments, increased debt-to-income ratio, or external information such as a sudden drop in that company's CRI. This company dashboard goes beyond financial performance and provides real-time information on significant events, news, and change sentiment indicators for the company and its competitors, including a COVID-19 Resiliency Index, the CRI, developed by our partners at Innovesta to help understand the specific impact of the current global pandemic on individual companies, entire portfolios, industries, and regions. This detailed and real-time information from the outside world about this small business can then be incorporated into your ongoing risk assessment and decisioning models using the Stratify platform. Stratify's What Can I Do functionality recommends how the lender can take action while also knowing the impact of that action, such as delaying or even forgiving some payments that would both help the small business and simultaneously increase that company's chance of loan repayment. Risk experts can easily incorporate this knowledge into their decision models going forward, knowing who they can continue to lend to safely. The best decisions are made when experts have access to relevant and timely information and the tools and resources to implement their views. The partnership between Stratify and Innovesta does just that and enables you to harness the power of your expertise with the right data to make informed decisions at scale. Small business lending is essential for our economic recovery. Stratify is here to drive an inclusive financial recovery. We are offering reduced rates for any bank that signs up with us by the end of this month. Please reach out if you would like to learn more, and thank you so much for this opportunity.
Well, thank you for all these wonderful demos. We have seen amazing 4 startups. Let me just make sure that everybody is visible. Hi, Noah. Hi, Karen. Hi, Laura. Hi, Patrick. So what we're going to do now is answer some of your questions. I know some of the questions have been answered, but we're going to go ahead and expand on some of these. And as such, I will collate some of them. One of the questions that I personally would like to ask is, this is something that came up in yesterday's meeting, was number of you have talked about how quickly you can onboard and implement. Would you mind just also telling if you're a SaaS or on-prem solution? And I'll start with Noah yourself. You're muted.
All right, I'm sorry. Actually, could you repeat the question? I was
SaaS or on-prem?
SaaS. We can do on-prem, but we much prefer SaaS. Makes it much easier to set up and to administer.
And how long does it take you to implement? Because this is one of the common themes across everybody was the speed in which you implement, the speed in which you start helping banks manage their workload. So.
Sure. Yeah. So we're an end-to-end loan origination system. There's a lot there for a client, for a smaller client, and this would not include a bank, but for a CDFI, for example, or an online-only lender that wants to take a sort of templated version of LendingFront, we can set them up in a matter of weeks. For a bank, it would almost certainly take longer, especially if they want us to integrate with the core system. So probably a matter of months.
Okay. Wonderful. Patrick?
Yeah, great question. So at FinCure, our onboarding can go about 6 to 8 hours of training. Obviously, as a SaaS software, we can be deployed that day that a customer were to sign up with us. Integrations, generally we try to take a crawl, walk, run approach. We want a user to get comfortable with the system, get their workflows going, and then identify how best to integrate. But even with that, you know, a customer could have a fully trained staff, launch product fully integrated to their core systems as well as CRMs, BI tools, et cetera, in sub 1 month.
I'll go with Karen.
Hi, everybody. Great presentations, everyone. So glad to see you all again. As close to in person as we get. We can, like Patrick, we can get onboarded that same day. Our PPP solution can get onboarded between 1 to 3 days, depending on how the bank is organized. We will be SaaS or on-prem, depending on what is desired. When we're going direct to market, typically in this use case, it's SaaS. If we're going through our collaborating partner, Oracle, then an on-prem solution is desired. So it really depends on the use case. And our integrations are whatever is required by the SBA today.
Thank you, Laura.
Wonderful. Thank you so much, Denise. And hello, everyone. So first question, either on-premise or SaaS. So we can deploy in either, though agree for speed, SaaS is quicker. And then for times, can get folks up and running on the platform in same day. Our initial models, what we focused on the demo, that initial COVID correction layer or crisis response model can be built within a week, and that is fully tailored to the specific needs of that given lender. So that can be done within a week with integrations starting to get up and running within 1 month.
Thank you. And so my next question is looking at the number of questions coming in, and I'm kind of collating them. One of the questions is around the topic of data. Given that the data is going to be significantly different, pretty much everyone here is using different methods to balance the change in data that we're seeing as a part of this pandemic. Noah, you talked about customer sentiments. Laura, you're partnering with another company. Patrick, you talked about AI, and so did you, Karen. Can we just have a conversation around how are you handling the data issues, and what is the volume of data that you are using? There is one question, and I'm putting it all together. but there's one question around source of the data. And I'm just going to leave it open for all of you to comment on. And I'll start with, we'll go the reverse order. Laura, we'll start with you and then Karen.
Sounds great. So I'll say in summation, we can take information from a variety of sources and combine it together in a way that is additive using the modeling approach that we showed earlier, what we call a probabilistic rules engine. One of the key benefits of this approach is that it can make very good use with even small data sets. So even if you have small data sets that you're working with and you need to extract maximum single signal from those small data sets, this approach can extract, I'll say, much more reliable signals than other advanced machine learning approaches. So small data is no problem. And the ability to combine information that comes from internal sources within the bank and your internal relationship with these customers, combine that with data from the outside world, in particular the data we partnered with Innovesta to bring into the platform. That all can be done seamlessly such that you're extracting insights from multiple different data sources and putting them into one model. Importantly, with your expertise layered on top of all of that, which can really help transform even data from previous crises or previous market scenarios to be relevant to the time right now, leveraging expert assumptions to help with that transformation.
Thank you, Laura. Karen?
Hi, so our tagline is that we give banks and credit unions the clearest view of their business customers. So what that means is that if they wanted to gather financial statement information, for example, they can either take the financial statement and analyze it, or they can use Patrick's product, which looks incredible, which will take what is basically a print off. I was a lender. I had plenty of those print offs of those financial forms and then analyze it. What we're doing, so Patrick, let's chat after, is we're gathering APIs to over 10 accounting systems. So we can gather the information from source. So that is one way in which we gather data. PPP is very different from typical lending because typical lending will look at a financial statement. Are you, as a business, able to pay back what you're borrowing? That's the regular loan. PPP is asking, how much are you spending? We'd like you to keep spending that amount and we're going to give you money in order to make you do that. So outside of the accounting information and bank statement information, what's being looked at is payroll. And so what we're doing is we're gathering from the widest variety of payroll providers because we're able to gather that report and pull it and verify on the back end that that information has not been tampered with. So we are looking at very new forms of information for processing loans when it comes to PPP that really isn't used in a regular lending environment. And then the other piece is that the SBA has, typically it will take a government body 3 years to come up with new guidance, and they've done it in 3 weeks. So there is going to be changing facts based on what happens, fraud that's caught. And just today we looked at, or was it yesterday? I'm losing track. Transportation is now a category. So if you have access to 800 APIs, what you're looking at is a technology provider that tweaks their own platform. There's no need for a bank or a borrower to go back and recalculate things manually.
Thank you, Karen. Noah, Patrick, do you want to add?
Yeah, sure. Yeah, Karen, eager to talk after this for sure.
It's a great opportunity for partnerships, which is going to be something we're going to come back to.
Yeah, absolutely. No, very exciting. So I won't take too long, right? At the end of the day, what FinCure is empowering our banking and commercial lending partners is to, unlock the data that is traditionally trapped within those financial documents. Not only is it sometimes just trapped within the financial document itself, but it's also trapped in an Excel document, right? A SharePoint document or some other database, and it's really unified across each team. So, that's what we're trying to do is eliminate that large manual effort up front, as well as allow a commercial lender to consistently review that data, have those ratios that are so important, understanding the health of that loan or that business or that borrower on a weekly, daily basis.
Yeah, I'll just add a little bit and sort of sum up our approach to data. And by the way, Patrick, I mean, I think it looks like you guys have a great product, and that could be of interest to us as well. But Lending Front at root is agnostic to the data sources. We can work with any data source. We have a number that most of our clients or a kind of critical mass of our clients want, and so we've effectively folded those standards, and that would include, for example, Experian for other credit bureaus also, but Experian is our go-to if you're just going to use one, because they have a very good, not only obviously the consumer credit scores for business owners, that's something that a lot of small business lenders want to look at, but then also they have a decent database of business credit history, and they have a relatively sophisticated blended model that marries credit information on the business owner with that of the business, and weights it according to the time in business and so on. We mentioned bank statements before, but anyway, so there are a set of data providers that our clients like, and for those sources, we often have reseller arrangements where they're effectively included out of the box in Lending Front. But for some clients, and especially our largest, most sophisticated clients, they have very well-formed views on what data sources they want. And so we will often end up going and setting up custom configurations with them, and often building or somehow incorporating their own models, and there are a range of different ways that we can support other data sources. And that's something that we're working with a lot to sort of rethink now. That, I mean, some clients, for example, I'm in a conversation with an equipment lender who's a very well-established equipment lender. They have a lot of small business clients, and they've only ever done equipment lending. And now all these companies aren't able to pay their loans, so they're looking at standing up some other kind of credit product that would just give effectively working capital to their clients, which include, for example, a lot of restaurants they've financed the restaurant equipment, but they want to help these guys stay open, and they're just looking for a new model. So anyway, so they're looking at other kind of cash flow. They're thinking. Everybody is struggling to figure out what makes sense here, and everybody is looking at other data sources, and so there are a lot of ongoing conversations about this exact subject.
Thank you. And I will have one final question to all of you, because you're all in. We heard of two partnerships. One was Laura with Innovista, and Karen, you talked about your Oracle partnerships. So one of the things that, and this is a general question, how did you guys all were able to get in front of these partners and banks as a part of, to sell your products, to actually build the partnerships? What helped you through that? And that's, and after that, I will be turning it over to Devin. So go ahead. No, we stop with you. Do you want to start, or should we go with Karen and Laura first?
Oh, I like getting it out of the way. Okay, partnerships. Okay. We have a few different types of partnerships that include. We were just talking about data sources. So Experian, for example, Plaid, Aqualist. Mm-hmm. These are sources of data, and we have various relationships with them that range from simply we've already done an API integration, and so that's easier for us to offer new clients, to referral arrangements and reseller arrangements. So that's one type of partnership. And those, by the way, those referral and reseller relationships can go in both directions. So sometimes we're able to basically resell their product to our clients and capture some margin on top of that, or they know us, and they know that that we have happy clients that are also clients of theirs, and they have other small business lenders that are struggling with to solve some of the problems that we can solve, and so they refer them to us. Mm-hmm. So that's maybe I'll leave it there. There are other partnerships, but they're a little more custom and have solving specific problems that may not be relevant to others.
Yeah, thank you, Noah. Karen, do you want to?
Sure. Yes. We are partner first. We tend to look for situations where 1 + 1 can equal 3, so to speak. So Oracle, because that's what we're all here working tirelessly. I think everybody on this call, both the panelists and attendees, are feeling it in the last couple months. So the first partnership that we announced with Oracle was really about them being a trusted partner to service clients in the cloud or on-prem based on need. And what they wanted was the most robust PPP platform available. So they vetted us and they vetted others. And we started this process where we were simply going to be providing the thought leadership in that area. It has turned out into quite a collaboration. And I think if there's an unsung hero in this entire market, it is collaboration between banks, between media, between fintechs, between everybody is just putting all the pretense aside and saying, I have this problem, can you fix it? And then people will say, well, I can fix this piece. We need this company to fix this piece. And solutions are being thrown together on the fly. On the last presentation that I was on just an hour ago, there was a bank, Valley Bank, that said, if you have the right people, any problem can be solved. So that's really what's happening in the Oracle partnership. I could not believe it, but they would put me on the phone with their clients with no time at all. And that's what's happening. We are about to announce another one, so stay tuned. We'll put it out.
Okay, wonderful. Wonderful. Laura, do you want to go first?
Yeah, I'll just say, first of all, 1 + 1 = 3 is my favorite kind of math. So I'll agree with Karen wholeheartedly. I think that there's such a huge opportunity right now for folks to partner to just deliver greater value in this time of need. And it's 100% what we believe at Stratify as well. Our partnership with Investo was really born out of the need that we were hearing from our lending partners. They were having a lot of trouble getting real-time insights about how, I'll say, the outside world was impacting their portfolio. And we were able to find in Ovesta and the very unique work they're doing through our network and align on a partnership. Interestingly, they have a very different use case that they're focusing on that we're partnering with, where they're helping folks with supply chain management and vendor onboarding and ongoing vendor risk analysis and due diligence. And they really needed a transparent and flexible modeling tool, which is exactly what Stratify offers. And our lenders needed their real-time insight from the outside world about how small businesses in particular are being impacted right now. So the marriage made a ton of sense. Not the least of which both of us really believe in transparency and a greater access to the understanding behind these risk dynamics is the way that we're going to have better outcomes than the way a lot of things are headed now.
Thank you. Patrick, any last comments?
No, I mean, I agree with what everybody else said here. I think really what's exciting for us here at FinCure is seeing banks having to innovate faster than they ever have had before. Which is then forcing us, right, as fintechs or within our ecosystem, right, to keep pace, if not right, be ahead of them in terms of our own innovation. And then sort of the unity that you're seeing in the ecosystem has been fantastic. So we're really excited to see our sort of software and what we're all dealing with every day kind of come to the forefront. Wish it was better circumstances certainly, but it is definitely something interesting we've been keeping track of.
Thank you. And thank you. Wow, that was very, very wonderful demos, exciting future for banking and what you guys are doing, wonderful work. Thank you again. I'm turning it over to Devin, but one word, I think you guys all have benefited a lot from MassChallenge FinTech connections. And with that, thank you again. Wonderful work. And Devin?
Thank you so much to me, Sarah, and the Boston FinTech Meetup. Also, thanks for the excellent demos from Karen, Patrick, Noah, and Laura. And finally, thanks to our community for tuning in. If you guys have additional questions, you can reach out to our team at fintech@masschallenge.org, and we'll connect you with all of our panelists. Hope to see you tomorrow at noon EST for our data and workflow demo, as well as Thursday at noon for our customer experience demo. So see you soon, and thanks again, everyone.